and welcome to Markets Today. I'm Lata Venkatesh and with me is Surabhi Upadhyay. After 7 days of a losing streak, yesterday the markets whipsawed and of course gained. Today they gained with some sense of stability. It was a nicely crawling upward kind of market and there were some spectacular gains in the mid-cap space. Hi Surabhi.
Hi Lata, and some not so bad earnings also today in the broader market. All right, let's quickly run through the headlines. A day of steady gains on Dalal Street. The Nifty climbs 0.7% to close above 8,600. The Sensex crosses the 28,500 mark. Mid-caps, however, outshine blue chips with the mid-cap index surging close to 2%.
JSPL surges over 6% as the Delhi High Court orders withdrawal of 2 of its coal blocks from the upcoming auctions. JSPL had contested the change of the end use of these blocks by the government from steel to power. Bhushan Steel also gains on hopes of a favourable verdict on a similar plea filed by it.
A good day for mid-cap earnings. Rico India and NCC hit 20% upper circuit as numbers beat estimates. Syndicate Bank, meanwhile, rallies 10% as provisions fall and bad loans see only a marginal increase in the third quarter.
That was some of the headlines from the market, and here are the experts that we have lined up on the show for you today. Pankaj Vaish of Citi will give us his targets for the Nifty and the Sensex, his view on the markets in 2015. Ajay Srivastava is also joining us to give us his outlook for the mid-caps in particular. And we will get to some perspective from the management of some of the IT companies from the sidelines of the NASSCOM India Leadership Forum.
All right, but before we get to that opinion, let's straight away get to the day's trading action. The recovery is slowly gathering steam on the Dalal Street market. Snapped a 7-day losing streak yesterday, and that's been followed up with another solid session today. Anuj Singhal is now here with the day's market trading highlights. Anuj.
Looks like the bulls are back. Today was a good day for the bulls actually. It was better than yesterday because it was with far less volatility. And the mid-cap index really was the star of the day. And the kind of rally that we had in mid-cap stocks today was phenomenal. And the linear chart that you had in the mid-cap index was telling you that bulls were feeling good about trade today. It was broad-based buying that we saw today. And in fact, a lot of FNO stocks rallied 5 to 10%. When FNO stocks rally 5 to 10%, you know that traders are having a field day. Let's talk about some of the stocks then. First, the heavyweights that supported the market. 3 stocks really, Reliance, L&T and ICICI, all up between 1 to 3% in trade today, and that helped the markets. But it was broad-based. Take a look at the next 6 Nifty gainers. You had stocks like Jindal Steel, Axis Bank, Tech Mahindra, apart from that Asian Paints, Maruti, BPCL. So across the board, from individual sectors, we had stocks gaining ground in today's trade. There were some losers as well, though, in trade today. ONGC in particular, that was down about 3%. BHEL was down 2% and Tata Motors was also underperforming, down about 1%. But the real story of the day today was in the mid-caps. Take a look at some of these big stunning moves in trade. Fortis locked in circuit 20% higher. Nagarjuna Construction, after a good set of numbers, locked on circuit, and Hindustan Construction as well, up 12%. Then again, take a look at some other stocks. Pipavav, Syndicate Bank, Wockhardt. All these stocks up between 6 to 16%. Some more stocks, and from FNO stocks, Eicher Motors, 16,000 rupees stock now, up 7%. Aurobindo Pharma up 7%. CESC up 6%. So big gains across the board. 2 things which stand out now is that the market has found a bit of near-term bottom at 8,500, and traders are now gunning for a lot of these mid-caps again heading into the budget.
Thanks a lot for that, Anuj. Actually, that's very succinctly put. Clearly, the bulls are back in action. If after some of those dismal banking numbers, you could still see buying come back to the Bank of Baroda's and the Punjab National Banks. Clearly, the action was not lost on the private banking space as well. So banks led from the front. So it was this that was awaited by the market, the return of the leadership from the Bank Nifty. And then, of course, the scores of mid-caps that Anuj mentioned, notably Nagarjuna Construction and the construction companies, HCC, on just a smell that the budget will probably have something more for infrastructure. All those balance sheets, all those companies with good balance sheets like NCC showed significant gains. Likewise, Texmaco in the railway space. Again, with a whiff that perhaps the budget is going to provide some kind of infrastructure or order support for these companies. So clearly, this is the start of yet another pre-budget rally.
All right, so a day of good gains across the board, particularly in the broader markets. Let's now move to some market opinion. Citi's Pankaj Vaish believes India will continue to attract foreign flows and adds that the weakness in earnings is only a temporary blip. Listen in.
Well, I think equity markets have already assumed a lot of good stuff happening, right? They have, as they should, right? Equity markets are, for the last several months, everybody who said to me, aren't they running ahead? Yeah, but that's the animal, right? It always runs a bit ahead, and for good effect, because it actually can provide the right environment for people to raise capital.
I know that your in-house view is a 2015 year-end target of some 33,000 on the Sensex, 9,850 on the Nifty, and I don't know if you've revised that in the time since I've read this note, but we're already near those levels, right? Especially on the Nifty, we've been to, that level and come back, not 9,850, but we're near 9,000 levels.
Well, we were about 10%, still 10% short of that, right?
That,
we got to 9,000.
Would you revise this at this point in time if you're expecting that fund flows will definitely be better, and that given the restricted opportunities in debt, some of that will then find its way into equity? So equity will be a better
Menaka,
year this year.
I don't think fund managers overseas are necessarily thinking them as competition to each other. If they like India, they'll come to India, and if they like Indian equities, they'll come to Indian equities. It's not going to be just based on whether there's debt limits outstanding or not. Our strategist, I think these targets are decent, sensible targets. I don't think there's any reason to change them now, but they are kind of independent, and so I don't want to speak for our research wing, but I think these are sensible targets. At this point, there's probably no reason to change them. There was some cautionary note from them that earnings are slightly weak, but we hope that this is just a temporary blip down.
Okay, we all hope it's a temporary blip, but at the moment there's little evidence that things are on the mend. Well, now let's shift and listen to all the action from the futures and options space. Nigel D'Souza is here.
Well, take a look at the options data first. The 8,400 put as well as the 8,500 put, they have been getting written over the last couple of trading sessions, and today as well they were getting written. But the real support for the market comes at around that 8,500 level, and bulls are doing their best to protect at that level. And the 8,600 put today was getting written. So the premium over there fell from around 116 rupees to around 75 rupees. So the stop loss for those traders comes in at around that 8,500 level to around 8,525 odd level. The 8,600 call, meanwhile, that's getting written. So the premium today jumped from around 130 bucks to around 160 rupees. So that's telling you the stop loss for these traders comes in at around the 8,730 odd level, while the 8,650 call as well was fairly active. The premium over there bounced up from around 100 bucks to around 127 rupees. So clearly, if the Nifty gets up and going, we should see some kind of selling pressure come at around that 8,750 odd level. Individual stocks that were in focus, Syndicate Bank did see big buying in today's trade. Aichi Motors as well, a rather big counter, but that one as well did see buying. Good amount of open interest build up as well. While JMR Infra, that stock in fact was quite wobbly in today's trade, but in the second half of trade, it came in for a big short covering bounce, as is the case with something like a CESC. That stock as well did see short covering. Bata, that stock in fact was getting sold into, ended lower by close to around 2%, while the rest of the market was quite strong. Bata was getting sold into.
All right, Nigel, thanks so much for that. Let's move on to the big news that came in from the courts today, and this is the latest in the coal auction tussle. In an interim relief to JSPL, the Delhi High Court has directed the central government to withdraw 2 coal blocks which were previously owned by JSPL from the upcoming auctions. Ashmit Kumar now joins in with more details. Ashmit, take us through exactly what the court has said today and the nature of the relief that has come JSPL's way.
Well, a big relief coming in for JSPL. JSPL had moved to Delhi High Court, raising the contention that as far as their 2 blocks, Utkal B1 as well as Gare Palma 4x6 is concerned, that was being used for their end-use steel plant. The government, by way of a notification, meanwhile, had changed the end-use for the upcoming coal auctions to par, thereby making JSPL ineligible to participate in the upcoming auctions. This was the concern raised, and towards that end, we understand that the Delhi High Court has given its verdict in very clear terms that not just Utkal B1 and Gare Palma 4x6, but also Utkal B2 will now be withdrawn from the coal auctions, and that the end use that were subscribed to them, the power sector, that qualification, that assignment of end use has been quashed, and that it is now up to the technical committee to review this allocation by the government of the end use, and that at least these 3 will be away from the auctions. What this also means in terms of the domino effect is that a number of other companies are also eyeing this development very carefully. Just this morning we saw a new petition being filed along similar lines as far as end use is concerned. That is one that is already pending before the MP government, And there are other companies that have not resorted to legal remedies but have been watching from the sidelines very carefully. So clearly a development that will have an impact across the various companies involved in this issue here.
Sure. Okay. Thanks a lot for that, Ashmit. One will keenly await how things pan out. Though at the moment, those two blocks are not allocated for auctions just yet. They have been allocated to power, and the auctions are first going to happen more for the steel blocks. For news more news is actually following from the courts. This is a setback for the real estate major, DLF. The Supreme Court has refused to restrain the Competition Commission of India from passing orders against DLF's housing projects in Gurgaon. Just yesterday, the CCI had ordered preliminary probes into DLF's Sky Court and Regal Garden projects in Gurgaon for allegedly abusing its dominant position. DLF had contested this in the court today, arguing that the CCI should not pass further orders as the court is hearing several appeals relating to 3 other Gurgaon projects, but this one did not get the shoulder from the courts.
All right, logging on to the tech space now. While NASSCOM's FY16 guidance of 12 to 14% may seem sluggish, India's largest IT companies not only say that it's fair, but they also seem confident of beating that number. However, the mood on day one of the NASSCOM India Leadership Forum has been a little cautious.
I know TCS doesn't give guidance, but historically TCS has beaten NASSCOM guidance. 12 to 14%, easy to beat?
I think it will be our endeavor to always come ahead of the NASSCOM estimate. We have done that for a number of years, so I think you can.
Europe is an opportunity. Europe on a macro level, yes, you're right. They have, us in our dealing with them, we have currency headwinds. It's not the best of the news if Euro and US is going to become currency-wise a parity. But the reality is that it's also put some European companies under pressure. The companies which are export-oriented are obviously rejoicing.
See, clearly, I think the NASSCOM guidance of 12 to 14% for FY16 is a very realistic guidance. But since there are very secular trends which are clearly emerging, if you look at North America, which is the largest market for Indian IT companies, it is looking positive. There is strong momentum. Every metric is looking good. The pipeline is healthy there. So one would anticipate that North America will continue to go well. The uncertainties are more in Europe where, yes, there are uncertainties in the macro environment. There are uncertainties on the currency volatility. So I think the 12 to 14% guidance really factors in many of these elements.
Okay, so those were voices from NASSCOM. Let's take a break on that note, but coming up, Sudarshan Sukhani will join in for a look at what the charts are telling us about where the markets are headed. We'll also get you trading ideas.